Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital, and it is Thursday, June the 8th. I want to take just a brief moment to discuss what markets did last week off of the backs of a very strong jobs report that came in. We got last Friday. The S&P 500 was a positive week, finished the week up 1.83%. But the mid-cap index was up 2.57%, which is a great sign as the mid and small indices had been lagging behind the large so far year to date. And the small cap index, as measured by the S&P 600, was up 3.1% on the week. And so we are in this season right now where we've gotten the majority of corporate earnings reports so far from the corporations that have reported. We may have one or two here or there. But we're in this season now where a lot of news is either going to be economic news that drives markets or Fed news or Fed speak. And so we know that we have a Fed meeting next week. However, it appears from the Chairman Jay Powell that in several speeches that he's given that it appears that, especially with the job data that we got, jobless claim data today, that they may pause next week. So there's not much surprise baked into the market. So you're seeing the markets kind of flat here, moving up a little bit on some news economically. But I really wanted to spend a little bit of time today to talk about the very big divergence that we've seen between growth and value in the equity markets. So if you're a value investor, you're saying, man, the S&P 500 is up 11% year to date and I'm flat. Well, that's because the value index in the S&P 500, if we were to splice it open and split it into growth and value, as of last Friday, the value index was only positive by 0.6%, or only 60 basis points year to date. Inversely, the growth index is up 23% year to date. So all of your returns are concentrated right in that growth area of the equity markets, of the S&P 500. Also, year to date, the large caps have well outperformed the small and mid cap indices. And a lot of that is predicated on the fact that you'll remember that, as we've spoken about in the previous weeks, the market's been driven really by about 10 names, covering 95% of the returns year to date. And the market finally, when we got the jobs report last Friday, did what investors have been looking for and broadened out a little bit. Your winners were sold off to buy everything else in the market. Well, it's not always that encouraging sometimes to see that, as you'd love to see new money come in and your winners continue to do well, but the rest of the market catch up. But we see this big divergence year to date, so it's that time of, do you chase the growth or do you wait in the value that you're at? So right now we wouldn't be chasing growth here at these levels at River Place, and we would be telling you to stay prudent where you are, as there will be a reversion to the mean. And a lot of this, what's baked into this is, as we went into this year, there's so much negativity from pundits and analysts on Wall Street. We've heard about the looming recession for about a year and a half now. That recession still hasn't come to fruition. However, we are seeing signs of economic slowdown. Europe did report two very fractionally negative consecutive quarters of GDP growth. And you're seeing some slowdown here in the United States in consumer spending and things like that. However, the consumer still does remain resilient here in the U.S. The other thing that you were told coming into this year was about the corporate earnings recession that was imminent. Well, we have not seen that so far. Earnings have held up, and so if earnings continue to hold up, that'll be the catalyst that can move the market higher for the remainder of the year. So we'll learn more about that as we head into July and August. But until then, expect some fluctuating, maybe a pullback here or there, as we are trying to speculate what we think earnings are going to be as we move into next quarter. So as always, if you have questions about what's going on in your individual portfolio or the divergence that you're seeing and you just need to talk to somebody about it, feel free to give us a call. We'd love to talk to you. You can reach us at 904-346-3460. Thanks, and have a wonderful rest of your day. Bye-bye.